Hello and welcome to the latest crypto wrap-up where will be taking a look at some key metrics to see how the markets are looking. Bitcoin is consolidating after a huge run-up. We're seeing strong fundamentals for the long term. But what about the short term? Well, in the past week, we've seen price mostly consolidating between $111,000 and $113,000. And while this may seem like choppy, sideways movement, this is actually a normal and even healthy development in the cycle. We've seen this time and time again throughout the entire history of Bitcoin. In fact, if we take a look at the last two cycles, we can see that in both cases. Bitcoin saw a massive spike in price, followed by a period of consolidation. The difference between then and now is that the amount of consolidation was much greater in the previous cycles. So this could be an indication that this cycle may be different, that it could play out differently than the last two cycles. But there's another interesting piece of data that suggests this may not be the case. You see, most of the supply of Bitcoin is currently in profit. This is a metric that has historically signaled key points in the Bitcoin cycle. And right now, we're seeing a similar situation to what we saw in early 2017 and late 2020. These were points of significant market reversal, marking the transition from bear to bull and vice versa. So what does this mean? Well, it's possible that we could see a similar reversal in the coming months, potentially setting the stage for a final push to new all-time highs. Looking at Ethereum and altcoins, we're seeing a completely different picture. There is a lot of interest in altcoins right now, especially among institutions. In fact, over the past week, we've seen Ethereum hit a new all-time high of almost $4,955. And this is supported by on-chain data showing a huge rotation of capital from Bitcoin into Ethereum. This is likely due to a combination of factors, including increased institutional demand, enhanced scalability, and reduced gas fees after the London hard fork. In terms of regulation, we've got some positive news there as well. Last week, the U.S. Commodity Futures Trading Commission stated that offshore crypto exchanges can now legally serve U.S. clients by registering under the Foreign Board of Trade or FBO program. This could open up the floodgates for new listings and new investment products. On a separate note, the U.S. Commerce Department will begin publishing key economic data, including GDP on the blockchain. This initiative aims to expand data distribution across government agencies and is a significant step towards wider blockchain adoption. Finally, in terms of corporate adoption, we're seeing this happen at a rapid pace. We've recently seen a number of crypto treasury companies being created with the goal of acquiring and holding Bitcoin and other digital assets. And this trend is only going to accelerate as more and more institutional investors like JP Morgan get involved. JP Morgan is actually launching new digital asset custody services. They've been embracing crypto for quite some time now. And this is another step in that direction. So, in a nutshell, Bitcoin is consolidating, which is a healthy sign. Strong fundamentals still intact. Ethereum and altcoins are soaring. Regulation is improving and corporate adoption is accelerating. Thank you for watching and subscribe.